All right, welcome to Trendy Options. Today is Sunday, the 12th of January, 2020. Out on Twitter, I went ahead and put out a post about 3 hours ago asking followers and those interested in the market what they would like to see as far as analysis goes. Now, typically what I'll do is throw out a video that's only like 2 minutes and 20 seconds, falling under those Twitter specifications of videos and so forth. But I feel that Spy, and I'm really happy that everybody chose Spy, because now you kind of got a little bit more than what you probably asked for, but I hope you enjoy it. I'm going to give you an intro into overall analysis of SPY, looking at a weekly, a daily, and then intraday and so forth. And this happens to be one of our broad market analysis instruments that we use every week. So the SPY, the Qs, the diamonds, DIA, and the IWM is a very important part of Trendy Options of how we look at the broad market analysis going into next week and so forth. Now, the methodology that you see here, we use this in the room, and it's pretty straightforward. A day close outside of the neutral to the upside, we go long. A day close underneath the neutral, we go short, and we use those boundaries as stops. Now, let's go ahead and take a look at this. There's a couple things that I want to point out. So those neutral zones, we could call it, for this week, it's 326.62 by 325.11. Upper targets at 327.47, 328. Obviously, with some great bank earnings and some more follow through on momentum and trend, we can see higher extension targets. One thing to note is that we do not have supply up here. Very important to understand that. What does that mean? That means we have no candle formations that are built over here. So in the past, right, you might have on some charts, you might have something that looks like this, right? And so I would have a supply zone up here and I could say, hey, if price gets here, then this would be our target and we'd be looking to go short out of that supply zone. Well, that does not exist right now. So others might call this blue sky breakout and so forth. Now we do have this wick, which means if I take the lower or take the time frame and just go to something lower, we can find supply within that, say like a 2 hour, a 30-minute, and so forth. But I want to focus on the bigger picture for right now for this quick SPY analysis. Again, targets up here are pretty small for right now. And then targets to the downside, I want you to note that if we do close under the 325.11, the likelihood of a nice little bounce coming in this blue box area to this pink line is really good. All right, so we have a little bit of demand here, and we're in the middle of building demand as we speak. We did end the note on a higher high. All right, look to the past here. You can see also we had a little bit of demand in this area. We are annotating that here with a green arrow. Notice that when price left here, it came back to recheck this area within this zone, and price did push up through here. Now, this rally itself, this is really important. I sent out a SPX. So remember, ES is what we use in the room to really gauge the SPY and the SPX charts. That's all I have to use is just the ES chart. All right, but if you go back, what's important here is to take note of the most recent trend. The most recent trend here is starting from this pivot low, all right, to this nice little pivot high that we have here. So for you traders who trade supply and demand, Fibonacci's, and so forth, this is my point of measurement here. All right, this is probably around the 50%. All right, so we could get relief rallies out of here if price decides to come into here. If it were to break down here, we'd be looking at the move down into the origin of this move, roughly in this area. This is really important to understand so that if sometime in the near future we do have a substantial pullback, these are the areas I want you to remember. In this area is going to be roughly around 314.75 into 307. Below 307, we're looking for a move down into the origin of the move, 296.28 to possibly 289. As of right now, let's continue to monitor the weekly candles, looking for closes above the bases of the previous. See, note, this was the previous close on this weekly candle. Once we moved above that base, we made that nice move. We took out the high, which is right here, and we closed above that. Same thing here. We're going to be using this candle this week, but what that does is that opens up a really wide area. Matter of fact, looking at this body, 325.71, all the way into 320. So pretty wide spread here. All right. And I'm not really interested in the short side unless something like this were to happen this week. Okay. So a close in here. And really, the close would have to be lower on the bottom of this candle here. Okay. And again, this previous candle. So this guy right here. It needs to be on the low end. All right. Then I would be looking for that next week for us to actually make a low under this candle. Okay. And make sure that on a pop that it rejects again. And then you're looking for that next lower low and continue the short down into the levels we talked about. Okay. Could be these. And you get that nice relief rally out of here. All right. So this is what I'm looking at on a weekly basis. Far as going into just this week alone, what I'd like to look for on SPY is if we open in the neutral, I'm hands off. If we start to close outside of the neutral line, 326.62, I'm looking to start along into 327.47, 328. Now, when I say starting along, that long on the option side could end up simply being a move that takes place just in the day. Maybe something happens, we ramp up, there's a catalyst, it pushes me into these targets. By the end of the day, I'm already trimmed or out of the position. All right, so just understand that. If we start to close down underneath the neutral and we close here, be looking for the shorts into these targets. However, example, if we start to close or say we start to move and we've hit all these targets on Monday, okay, what I'm looking for is a relief bounce out of here. Okay, so if we dig deep into this demand zone, then I don't want to be going short into demand. And see, that's the common mistake amongst retail traders like ourselves, is that we tend to get short right when the premiums are high. We pay up for those premiums just to find that a relief bounce can get you pushed right out of the position. So really what I need here is confirmation to stay short. Again, if this were to happen on Monday, all this is hypothetical. If this were to happen on Monday, I wouldn't be getting short into demand. Matter of fact, I'd hold off. The target's already been hit, right? So it's too late for me. So this trade would be off limits for me. Matter of fact, if we got a bounce out of here, I'm just waiting for price to come back up into the neutral. Again, into bank earnings, I see a little bit of chop this week to sideways action. Okay, chop sideways action to possibly down to come into these demand zones. Where am I thinking about getting long? Above 326.62. Again, if this, then that. If price gets above my neutral level, then I'm getting long. If my price gets below my neutral line here, then I'm getting short. Very straightforward. Now, as far as options go, I want to show you here. We're going to bring over the option chain on SPY. Give me 1 second. And we're just going to bring over my other screen here while we're looking. And you can see here, we could be going down into 17 January and so forth. What I'd like to pay attention to here, you don't need anything crazy to understand how to find open interest and so forth. This is very liquid when we're talking about the SPY, so you're going to see some big numbers in here. Notice on my option chain, I have open interest and volume. I do use delta, very important for me. But coming down here, you know, some things that really stick out. Look at that, 218,000 open interest on the 330s, folks. 218,000. Wow. All right. So when I look at this, I think range, right? And then I could come over here and I'm going to look on the put side, you know. And the first thing I notice, you know, are these closer jumbled numbers right in here. I'm going to go with this 40,000 to 23,000. So the way that I look at this is this right here. And it's 218. This could be my range for the week. It might not be that big. I mean, that's $5 to the upside. All right, maybe $4 to the upside, depending on if we get a dip into 324 and then up, it changes that number. But this is what the range is. Now, on the extreme side, okay, on the extreme side, this number right here could be a factor. Okay, 146,000, see that? So 320. All right. And then over here, this would be the extreme side as well, 330. And I would say a little bit closer. If it's going to just be a tight, choppy week, then I'm going to use this 59,000 in here. Okay. So that tightens it up a little bit. Could be a 328 to 324 kind of week. Nothing too crazy. But on the extreme side, we're looking at this level and possibly this level. Just understand that. So when you get into supply and demand and so forth, you can kind of look at these and go, well, what does 320 and what does 330 mean to me? Well, let's just check and see. Maybe it means nothing, right? So we're going to move this over. Let's look at 320 and 330. Well, I've already talked about this is a demand zone, right? And underneath this, down here, we have what we call the trendy edge. That falls into 321.88. Now, the chaotic candle, the candle itself on this weekly is pretty big. If you guys remember, this was a pretty nice week overall, kind of selling off into Friday. Okay. Now, moves like to, if they move too fast, they don't fill all the orders. And so what happens is price comes back down to refill those. That's just an ideology, right? So price will come back down into here. Let's look. Chaotic candle, 320.42. There's a little bit of interest down there. So if price, for some reason, we have a catalyst in the market, banks don't do well, or maybe banks do well, but it's just an excuse. Price still sells off and so forth, and everybody's confused, right? But look for price to come back into the origin of this move, which puts us on the put side of that open interest of 140 something thousand. Now, on the upside, we saw the number 330. Now, where could they be getting 330? Now, everybody does Fibonacci extensions differently. They could simply just be looking at the ATR. I mean, seriously, weekly ATR was 6.2. Price is, pushing at 325.71. 330 is definitely not out of the question. That only gives you $4.29 to the upside, right? So not that hard of a guess, but let's just say we want to do some Fibonacci extension. I'm going to use the most recent range. I'm going to come over here to my Fibonacci extension tool. All right. And then for me, nice little rally here, pull back. I'm going to use this trend right here. I'm going to push that right in there. And you can see here, 23.6 is my first target. That puts us right around the 330.64. Those are, ladies and gentlemen, the open interest of the SPY, putting us at 330 and down at 320. Those look like the extreme levels for this week that we're going into. Again, my overall sentiment, just an opinion, is we're going to have a little bit of choppiness until the market digests some of these earnings. So what does that mean? For me, I use flags. I live out here on the beach. Yellow flag for me just means caution. When it's choppy, understand the conditions. For me, I want to be intraday trading. And if those intraday trades turn into something special, they can turn into swing trades. But when we become or come into choppy situations, I want to be really quick and decisive. I want to react when our levels are hit, not after the fact. If you have any questions, please reach out to me. This is my analysis on SPY. If you want to check out what we're all about, please visit trendyoptions.com. And if you have questions, just random questions, reach out to me on message. And you can ask also underneath this thread on Twitter. Have a nice day.